Hello, everybody who actually watches my YouTube content. I'm going to make a summary of everything that has come up on Stockminds, at least for the main Stockminds trades for the month of September. Even though there's one day left, I don't really care. I'm still going to make it. And I'm going to sort of walk through everything that happened, or some of what happened, because there was quite a lot. So let's get into it. So before I begin, so that you have some context, this is the Stockminds platform. This is just the main page where you can go and look at how things work, what things are, look at some of the stats. But then at the top, if you click this little diamond here with the person, that is the main premium page of Stockminds, where you would go every morning to see what happened or what's coming up. So on Friday, ONCO was the only one that came up. And if you click the actual ticker, you get more info. So for each ticker, you get a probability that it will be profitable. So this one, 64%. You would want something that's over 50 because then it's actually favorable. It's not just flipping a coin, and obviously the higher the better. Gives you a little bit of a probability between two different trades. So there's a probability that the stock will move up as soon as the market opens or move down as soon as the market opens. Here, it's showing that it is more probable that it will move down at the market open, which means that it would follow this right chart. So what Stockminds is showing is that at the market open, it's predicted to move down to within this range, roughly 549 to between 584 or 583 and 496, and then come back up. So then the trade that it gives you is to buy it. What you would do is buy it after it comes down to within the range, so below 583, and then if it comes back up to 589, which is the entry price right there, then that's when you would buy, enter into your trade. You'd have your stop loss here, and then you would sell a quarter of your shares at each of those prices. If it were a higher probability of moving up, or if you were to take the alternative trade, because Stockminds isn't necessarily right, even if it is a high, because it's all probabilities. If it's more probable that it'll do this, then it could end up going the other way, in which case you get the other trade, which would be saying to buy it right at open, set your stop loss here, profit at those points. And then these movement percentages are just from the market open, how much it's predicted to move initially and then reverse, or move initially and then reverse. So that is what the two trades for one individual ticker would be. And then of course it gives you other predictions, such as like how it'll move throughout the day, and gives you a calculator and whatnot. But I'm not here to show you all the features. So that's what would come up on Stockminds. So for the month of September, here are some summary stats for you. There were 60 total tickers or stocks, a total amount that was tradable, as in it actually had data and gave predictions that were, it actually gave you trades to make. There were 45, or ones that ended up following and providing entry points or following a predicted move, 45. And the total that moved as predicted was 29. So 64% for the month of September that it was accurate. You would have had a profitable trade if you followed how Stockminds predicted that it would move. Now, because of all the information that Stockminds provides, you could trade so many different ways. So I just gave a little summary of some of the ways that you could trade for all of the possible trades that came up, for only the highest probability trades that came up, and then for the two highest probability stocks that came up that day for each day. So You can screenshot this or pause it and take a look, but you can see that all of them had really good returns for 1 month. All of these are added, so no compounding is happening whatsoever with any of these stats. So this is as if you risked the exact same amount for every single trade. So if you had $100, you put $100 into every single trade, then this would be the outcome of the end of the month. Gives you what your average return is if it's a profitable trade, a losing trade, and your win rate. So some of them, you could see, actually quite a few of these strategies, you lose more times than you win, but your wins are significantly larger, in most cases double what your losses are. So you still end up very profitable. But some strategies, such as just following at how it's predicted to move and only using profit 2, method 2, are successful for all 3 of these groupings. So I'll quickly show you just so that you can screenshot or look them up yourself, look up what actually ended up happening and what Stockminds gave. But all of the trades right here, so you have the date, ticker, the probability that came up on Stockminds, the probability that it'll move up at the open, down at the open, and then what the 2 trades were. So entry, stop, and 4 profit prices for the move up trade and then the move down trade, and then what Stockminds gave as what ended up happening. So for the up trade for AUUD on September 3rd, it stopped out. Down trade, it stopped out, or nothing happened because it had no data, or profit 4, profit 1, profit 2, whatever it ended up doing, and then your returns. So these are all of them, and then I'll scroll down a bit to see the bottom ones. And you could take a look at these if you want. And then the highest probability ones are right here. And then the top 2 highest probability each day are here. So that's enough for you to be able to screenshot it or whatever. But so now I'll walk through what the different strategies are that I summed up for you. There is just trading them as they're predicted, just trading every single one as if it is going to move up at the open. That's it. Those ones generally have a much lower total return. Just trading them as if they're going to move down at the open. Method 2, which I mentioned before, is trading it as if it's both. You just take both trades. So no matter what, you'll take the trade as if it's going to move up at the open. Whatever ends up happening, hits profits, whatnot, whatever. And then if it comes down to within the range and then hits the entry, you take the other trade as well. So you trade both for each ticker. That's what that one is. And then multiple attempts on the move down. So this one's a little bit trickier to add to the statistics, but this is for situations where, let's say it hits the range, comes up to the entry for the move down trade, and then comes back down to the stop loss, and then you lost. But then it still stays within that range, and then it comes back up to the entry again. That would be another attempt at the trade. So this is considering the fact that you may be taking 2 attempts on them. And then this one is considering only using 1 profit. So you buy all in one group, you sell all of them at profit 2 or stop loss. That's it. And then profit 2, method 2 is using method 2, but only using profit 2 for both of them. So those are all your stats. Very profitable month, lots of highly profitable trades. And I'll show you some examples of what sort of information comes up on Stockminds and how it plays out. So OBLG was one of the top trade. These 4 here are some of the top trades that came up very high returns. But OBLG, let's take a look at that one first. It was the highest, or I'll just show you. So here is OBLG on September 12th. It was predicted to move down, and it was the highest probability trade for the day. So these three lines here are the predicted boundary, the movement for the trade, or for this ticker on that day that came up on Stockminds. So it was predicted to move down to the middle line, but then these two upper and lower bounds were the error, so the range that it could have moved down to. It moved down as expected, and then the entry 392 was right here, so you would have entered right here, and then your final sell price was way up here. So in this case, for the multiple attempts that I had mentioned, it's technically within the range if it hits this upper bound. So you could trade it where as soon as it enters the range, you buy it. When it comes back up to the entry, which this would have been a situation right here where that would have happened, and then it would have stopped out because the stop loss is 372, I believe, 371. So it would have stopped out, but then it would have come back up to the entry here if you took it there and then stopped out. And then you would have had to take 3 attempts if you traded it that way. An alternative way that you could trade it is just wait for it to come down to what Stockminds gives as the prediction. So it was predicted to move down to 369. As soon as it comes down to 369, which would be down here, then you would enter when it comes back up to the entry. Or if you look at the 3-minute candles, you can wait till it actually hits that point. The close of the candle is past that point. So here, for example, it was just a quick wick up. You probably didn't even get execution on your order if you had a limit order. So there's lots of different ways that this could have been multiple attempts, but regardless, the trade was buy it at this price right here, the entry mentioned. Final sell was at 624. So crazy good trade. If you look at that final profit, that last profit was at a 59% return. And then if you're looking at how the trade actually played out, then was it 72? Then you end up having a risk reward of an 11.6. So that's great trade. Obviously not all of them are like this, but this was one of the highest probability, and you just trade it as it's predicted to move. That's what came up on Stockminds. Enter the numbers, that's it. That simple. I'm not going to go into crazy detail of an analysis because the Stockminds AI does all that analysis for you. So VVOS, again, highest probability, predicted to move down. It moved down just as anticipated. The entry was at 324 and the stop was at 307. So if you're looking at this range here, 324 is roughly it is this top line basically, and then 307 is down here. And then the range that Stockminds gave as to where it was predicted to move down to, if you waited for it to come down to what it was predicted to move down to and then entered up here, you would never have stopped out. You would have hit the final profit, even though you could have potentially made more. It's still a 32% trade return, which is absolutely ridiculous. And if you didn't, you just waited for it to come within the range, then you would have stopped out once and you would have had to take another attempt, in which case you would have had a little bit of a loss on that first trade. You would have had a 5% loss on that first trade, but then you take it again and then you have your final profit at roughly another 59% return. So another great one, highest probability, trading it is exactly as Stockminds gives it to you. And you can check all the numbers that I showed you on the spreadsheet as well. And they come up on the Stockminds data on the platform, so you can verify. But the next one, okay, so here is BKYI on September 10th. It again, VVOS was the second highest probability, but still, top two, it was a 32% return. But then BKYI is the highest probability. So it is, and it was predicted to move up at the open. So now the entry would have been right at market open. Here's your stop loss, which is 176, and your final profit way up here. So again, this one, you just trade it exactly as Stockminds provides. There's no need for analysis or any of that junk. 49% return on the final profit. Overall, it gave a 26% return on the trade, almost a 27% return. But then, as you had seen on the Stockminds platform, each stock is given a predicted move. So in this case, it was predicted to move up, and then it was predicted to have a pullback of whatever value and then move back up. So if you were to just buy it at the open, enter bracket orders, you can check out my video on bracket orders if you want to learn how to do that, but enter your bracket orders right at the open and then leave them for the rest of the day. You would have hit all 4 profits and never stopped out. Now, what Stockminds suggests doing is once you hit profit 1, so once it hits whatever the profit 1 value is and that bracket order executes, then you raise the stop loss up to break even on the remaining ones. In which case, you would have probably hit profit 1, profit 2, and then you would have stopped out at break even on the remaining ones because it dipped down, but that was part of the prediction. In which case, you can enter again at market open and set your stop loss again, or depending on how it's predicted to move, it could be different. You can enter and scale the trade based on what Stockminds gave as the numbers and the predicted movement and profits and whatnot. But in any case, you could have either had like half or a quarter of the percent return, which was roughly 25% return, or you could have had a 26% return, 25% return, and never raised your stop loss. So again, crazy trade, no need for analysis, but that's what it ended up giving. And then GLMD is the next one. And this one is a good example of when method 2 is useful. So GLMD on the 17th of September, it is predicted to move down at the open, but Stockminds still gives an alternative trade. And this one was also the highest probability. So if you were using method 2 for the highest probability or the top 2 highest probability for that day, you would have taken this trade, you would have bought it right at market open, and your final profit was way up here. So your final profit was at a 132% return. That's nuts. But you would have made some, actually, is that right? 1250? No, that's not right. Those lines are not correct. You would have had a 26% return. So the final profit was down here, 846. So you missed out on some big move, but 26% return. You're not looking at FOMO information, you're looking at what the actual trade was. And this is what Stockminds gave. Buy it at the open, that's your final profit, done and done. Now, you could easily set a trailing stop or use the buy entry prices, stop loss prices, and then sell at whatever you're comfortable with. and you could have taken advantage of a lot of the rest of the move, which a lot of members did, because they'll take profit 1, profit 2, profit 1, profit 2, or profit 1, 2, and 3, and then they'll let the rest of their shares sort of coast and then sell when they feel comfortable. So there's lots that you can do with the Stockminds information. You don't necessarily have to follow things perfectly, but for those who just don't know how to do all the technical analysis and don't want to watch thousands of hours of content to learn how some guy will look at a chart and say it's fitting a pattern, you don't have to do any of that. You could just follow the numbers that Stockminds gives, and then you can make profitable trades. So this would be an example of when method 2 is very useful in your trading. So that sort of sums it all up. Very profitable. If you just traded the ones that are given to you as they're predicted, 207% return overall added. That's it. So if you started with $100, you would have had $300. If you just traded the highest probability one, literally one trade per day, you would have had a 63% return. Average win is 10%. Some of them are even better. So for the ones where you're only using profit 2 and you're trading it as it's predicted, your average win is 31% return and your average loss is 6%. You might win half the time, but you don't need to win every time if your win is 5 times the size of your loss. So that one provided some of the highest returns, 444% return. So that is everything that came up on Stockminds for the month of September. And if you want, what you can do is this handy strategy page on the Stockminds platform. You can check out how you're supposed to make the trades, what you do in a 50-50 situation, and some of the results for different strategies that are popular amongst the Stockminds community. And then what you can even do is, if you have access to the Stockminds platform, you can look at what all of the trades were that came up on for the previous month. So all of these ones were the previous month's trades, and then you can even back test using the calculator. So if I started with $1,000 and I started trading in February, and then I traded all the way up until now, and I use my entire account. But that would be only $1,000. It doesn't compound, and I only take profit 2, and I trade it as it's predicted, and I take the top 2 highest probability. Then my results are 129% return. Now that's the top 2 highest probability, and it's $1,000, and I'm using the entire account. So that's $500 for one trade, $500 for the other, for every single trade. If it's 3 months in, I don't scale up, I don't scale down, it's just $500 per trade. But let's say that's not what I want to do, and I don't want to just use profit 2. I want to use all 4 profits. If you just adjust that one thing, you have double the returns when you're using twice the amount, or you take all the profits as opposed to just one. And let's say instead of just trading it as it's predicted, you also do the alternative trade. So you trade with method 2. Then all of a sudden you get double that. You get even more returns. So you're taking more trades, but it's also resulting in more returns overall. And then if you want to compound, that's where it gets crazy. Let's say I want to do percentage of my account per trade. So in this case, it'll automatically default to using my entire account. So if I have $1,000, my first day, it's trading top 2 trades, then what it'll do is consider the fact that you are using $500 for one, $500 for the other. Whatever your outcome is, however much money you make, the next day you'll use half of your account for one, half of your account for the other, and then so forth. So if you just do that simple change, you'll get absurd results, 8,000% return. But then when you're looking at all of the trades that came up and what I showed you for the stats, is it really that crazy to have 8,000% return compounded if for 1 month you trade it as predicted and it's 135% return for the top 2? Not really. And then let's say you don't want to use your entire account. Let's say you want to use 50% of your account. So you want to save half of your profits. You don't want to necessarily use half of your profits, but you'll still add some of your profits to your next trades. Then you'll get 1,000% return. So you can mess around. You can even scroll down and see what all the trades were. So it'll show you what all the trades were that you made. And there's a lot, because I said I started in February and it gave me 461 total trades. So there you go. That's what came up on Stockminds in September. There have been lots of things that I'm working on. The automated trading that I had mentioned, that $500 account challenge that I'm doing, showing you exactly what I just showed you, except I'm only trading as predicted, the highest probability, and well, I guess I am using basically 100% of my account for those trades. So you can see, in this case, it's not as good. It's a 67% return, but so far we're doing really good. And then if you just change it ever so slightly, you can make even more returns. So lots and lots of information that Stockminds provides, and there's lots of exciting features that are coming. So yeah, thanks for watching. Hopefully this was informative.